Lindsay, Schram, taking you from homebuyer to homeowner with confidence. We're talking about the conventional loan. We're going to give a little bit of its history, some misnomers, misconceptions about the product, the actual structure of what the product looks like, pros and cons, and who it works well for. Stay tuned. In the 1970s, a group called Fannie Mae approached the federal government about being able to buy residential mortgage loans on the securities market. After some negotiation, the US government agreed. Over the next 10 years, they'd end up partnering with another group called Freddie Mac to develop the conventional loan product. They persisted for several decades doing loans known as conventional, and then the housing bubble hit and the market crashed in the United States. And Fannie Mae and Freddie Mac actually ended up collapsing. And rather than letting the conventional loan product just disappear, the US government stepped in and has taken back the conventional loan product and is actually running it until private investors come back in and decide they want to take it back over and buy it off of the US government. The most frequent misnomer of the conventional loan product is that you have to put 20% down to be able to use it. It's not accurate. In fact, the reality is your down payment could be 3 to 5% or even as high as 25%, depending on if you plan on living in the property, if it's a second home or an investment property, and how many units the house has to it. Now, that's getting super technical, and that's why you meet with a mortgage loan originator. Other features of this product are that if you put 20% down up front, there's no monthly mortgage insurance in the payment. But if you don't have 20% to put down up front, when you reach a 20% equity position based on the lesser of the sales price at time of purchase or appraised value at time of purchase, you can request for the mortgage insurance to be removed. So there's a little bit about the conventional loan product for you. On the pro side and on the con side, you're going to see that a lot of it depends on where your credit score is. If you have top tier credit, conventional is going to have some really strong pros for you. But if your credit is in the fair to low side, the cons get very magnified. So all of it links to what is your monthly rate for mortgage insurance, and then also how much paperwork do you need. So when we're looking at credit score, if you have stellar credit on the pro side, your monthly mortgage insurance rate is going to be really low. And on the con side, if you have a credit score that could use some work, we're going to see that the monthly mortgage insurance is tremendously high when compared to other loan products. So that's something to watch out for on this one. On the pro side, we also have something available called Day One Certainty. Now, everybody who looks at getting a conventional loan product may not qualify for this, but we have an automated approval system. And when we run your whole financial picture through it, it's going to tell us, do we actually need pay stubs? That's right. With a conventional loan product and Day One Certainty, we may not even need pay stubs today to be able to close your loan. It's also going to say, do we even need an appraisal, or have enough homes in the neighborhood been appraised, or maybe this house was recently sold that we don't need an appraisal on this house. So there's some things with conventional, depending on your financial picture in the home that you're purchasing, that may save you time, money, and paperwork on the pro side. Con side, we talked about credit score itself, meaning potential higher costs to you, especially in the monthly mortgage insurance. But they also tend to want a longer credit history on your credit report. So we frequently find that people who have less than 2 years credit history on their credit report struggle to qualify for the conventional loan product. This may be the loan product for you if you have a really strong credit score. You're looking to put some cash down, that also helps with this product. And If you're looking at buying a second home, a home for a parent, a home for a child with disability, or if you are looking for a true investment property where you never live in the place, this is your only choice in a loan product in today's market. We've covered today where conventional came from and what it's kind of become over time, a little bit of its framework, pros and cons, and who this works well for. Make sure that you read in the description my contact information. My team would love to hear your financial story and partner with you down the road to home ownership. And don't forget to like and subscribe, because we're taking you from home buyer to homeowner with confidence.